What's up? What's up? What's up, my mind your money business folks? It's me yet again with another video. So as you can see by the title of this video, the best months for stocks to invest in the stock market, right? Like, have you ever wondered what are the best months to invest in the stock market? I hope so, because I've always wondered. And so since I've wondered, I figured there are those of you out there that are also wondering the same thing. So I'm here to provide you with some information. Now, disclaimer, I'm not a financial advisor. All content provided on this channel and videos are for entertainment purposes only and reflects my personal opinion. So please do your own research and talk with a financial advisor before you invest into anything, because I do talk about the stock market, the research that I'm doing, and some of the stocks that I personally invest in. So getting back to it, because just doing some research, because I woke up this morning and was trying to figure out what to talk to you guys about. I am going to talk about today's stock market, but what I want to talk about first was the best months to invest in the stock market. And so then I found some information about, based on a 62-year study conducted by the Stock Traders Almanac, 5 months of the year produce significantly better and safer returns than the other 7 months of the year. I never knew that. I know you didn't either. So that's why I'm talking to you about it. These months are November, December, January, March, and April. Why? I have no idea. Okay, they added February to the list to formulate their 6-month switching strategy. Okay, the simplified rule is to invest in the 6 months, November 1st through April 30th, and then switching to safe fixed income products for the rest of the year. I don't know, come up with your own plan, people. But I'm just reading from the article that was posted based on their 62-year research. Okay, so if you back test the strategy since 1950, the article says, with an initial investment of $10,000 in the Dow, you would have gained 6,740% on your investment. That's pretty good. So if you had invested the same $10,000 from May through October, you would have lost $1,024. Okay, that sucks. You would have lost $1,024 had you invested in those specific months. You would have gained over 6,000%. Okay, this is pretty compelling. This is pretty compelling statistics, especially when you also consider that if you had invested in November 1st through April 30th, there were 48 years with gains and 14 years with losses, or a ratio of 3.5 to 1. On the other hand, May 1st through October 31st had 37 years of gains and 25 years of losses. That's big. Only 3 years had double-digit losses during November through April. True. And they all coincided with financial crisis. Makes sense. If you only use the last 26 years of study, the results improve gains of $585,910 versus $498. Wow. Pretty much the summary, the basic 6 best months to buy stock strategy seems easy enough for anyone to follow. You invest in the Dow ETFs like DIA during the good months and money market ETFs like SHV during the rest of the year. Again, talk to a financial advisor before you do anything, people. By adding a little common sense, which isn't common to everybody, right? And only implementing this strategy during years when the market is trending upward provides a safe investment strategy for most people. But you cannot time the market. You always have to be in the market. doing research and studying like I do on a daily basis. You know, yeah. Again, it says the best months to invest in the stock market is January, March, April, July, November, and December. So that leads me to today. The stock market is not doing so well. And so after learning that information about the best months, it helps me understand and not feel a way about the stock market being down today. Okay, because it says here Dow drops more than 400 points today, has a worst day in over a month, right? So typically, and I've said this in previous videos, September is normally the worst month to invest in. The worst. But the last half of September of this year, things actually went up. So the simple fact that now stocks are kind of cradling or going down during this month is not surprising, because research shows that October is normally not a good month. Now, starting November, starting next month, that's another thing. That's another story. And there's a lot happening next month, right? You have the presidential election. You have the Federal Reserve meeting. You have NVIDIA posting its earnings report. Those are major events happening next month. You know, it says here, stocks fell sharply on Wednesday with the Dow Jones Industrial Average on pace for its worst day in over a month, as higher Treasury yields weighed on market sentiment. The Treasury yields are going up. It's like people putting their money there. They feel safer putting their money there. I think, again, it's the election. Like the article I read yesterday, things are being impacted because there's a strong possibility of a Republican president. And no one knows how that's going to affect the market. I don't know. I honestly don't know. Okay, the 30 stock Dow shed 414 points, or about 1%. That put the benchmark on track for this biggest one-day loss since September 3rd. That was just last month. When it lost 1.5%. It's like, these articles are so dramatic. Okay, the S&P dropped 0.9%. The NASDAQ composite lost about 1.6%. Even though these things are these stocks are going down this month, the overall stock market is at an all-time high still. Like, let's go to, Microsoft is up. Oh, no, they're down. My bad. That was yesterday. But they're down almost $3, where they're down $3 right now. But the thing with Microsoft, year-to-date returns for Microsoft is almost 13%. Not bad if you were investing into that single stock. But let's go to an S&P ETF like SPLG. Its year-to-date returns have been well, it's down today, but year-to-date, it has brought in about 22%. So just because the stock market was down the last couple of days and today, it's not a bad thing when you've made money throughout the year. You've made more money than you're losing in this one day. So keep that into consideration, right? It says both Dow and the S&P 500 were headed for their third straight losses today. Okay, because the stock market just closed. It's 4 p.m. now. Okay. It said at its session high, the benchmark 10-year Treasury yield topped 4.2%. I think the other couple of days ago, it was at 4.1%. Now it's at 4.2%. So because the treasury yields are going up, they're saying that's affecting the stock market. It means people are putting their money into these Treasury yields, reaching its highest since July 26. Okay, the 10-year note is up 44 basis points in October alone, and that's pretty big. Treasury yields have been soaring over the past month, even after the Federal Reserve began cutting interest rates in September. Some have pointed in recent economic data as a source for a move higher, while others have noted the potential of growing fiscal deficits, because the U.S. is in a lot of debt in the U.S. and under a second Donald Trump presidency. I didn't even know this article was going to mention Donald Trump, but it did. It did. They did. A lot of people do not like that name, and there's a lot of people with money that don't like that name. Either way, to me, it says in the article, it's all about the impact of higher rates. The market is repricing the probability that the Fed can aggressively cut rates, said Brent Shute, Chief Investment Officer at Northwestern Mutual Wealth Management, an expert, right? That's what he said. There have been parts of the economy that haven't felt the impact of rising rates yet. But the longer rates remain higher, the more different parts of the economy have to reprice to that reality. The economy is out of equilibrium. It's out of balance, people. Okay, the most overvalued part of the U.S. equity market is large caps, he said, adding that he believes the market is due for a pullback in the near term as recession risks linger. Here they talk about recessions again. Before it was canceled. Now it's back, right? So dramatic. Mega cap stocks under pressure Wednesday was Apple and Nvidia. Shares losing 3% to lead the way lower. Apple was headed for its worst day since August 5th, Black Monday, when it shed 4.8%. Meta, Netflix, and Amazon were also down more than 2%. McDonald's, poor McDonald's. McDonald's fell more than 4% on Tuesday after the U.S. Centers of Disease and Control Prevention said an E. coli outbreak tied to the fast food giant's quarter pounder burgers has resulted in 10 hospitalizations and 1 death. I don't even eat McDonald's anymore. I don't. That stuff, it's not real. I mean, either way, I take that back. Because I don't know. I just don't eat it. I haven't eaten McDonald's. I can't even remember. Let's say 5-10 years. Yeah, McDonald's accounted for more than 100 points of the decline in the Dow. Interesting. So let's see what happened to the stock. Okay, my S&P 500 SPLG ETF went down 63 cents. Sucks. Microsoft went down $2.80. Oh, my Nvidia went down $4. It dropped below the threshold, but it kind of stayed there close to 140, but it went down $4.03. FTEC, my information technology ETF, went down $2.70. Broadcom took a big hit. It went down $5.87. Apple went down $5.10. That sucks. But the bad boys are still at a market valuation of $3.5 trillion. Nvidia was at 3.5, but then because of today, they're back down to 3.4 trillion. That's still a lot of money, right? Yeah, so that's it. But again, just remember, based on a 62-year study that was conducted, November, December, January, March, and April, also February, are considered some of the best months to invest into the stock market. So, yeah. So like, comment, subscribe, share this video. Let me know what you think, people. If you think anything at all, share, like. Let's get these views up. Let's add some more subscribers if possible. If not, I keep doing what I'm doing because I like what I do. All right, you guys take care. Peace.